So, just going over a couple of small things. I did some buying and selling today, and just going to go over something that I came across. And again, this is just me walking through my process as I do it. It's not a recommendation to buy or sell. Do your own research, yada yada. So, a while back, about a year ago, I did a video on a company called Ammo Inc. The ticker is POWW, POW, and I went through what I liked about it, what I didn't like about it. I liked the part that is the gun broker website because it has a very interesting moat, and it's in a business where they can make money from people buying and selling things, and they don't have real competitors because people like Amazon and Facebook Marketplace and eBay, they don't allow gun sales. So they sort of have the whole run of the place, but it was half of a business, and the other half of a business was this terrible ammunition business and with terrible management. So what happened? If you look at the company, it went up a lot. It got down to as low as $1 a share, and in the past month, or less than a month, it has gone up about 50% in less than a month. So I'm sure there's some type of insider trading, illegal tips going on, but be that as it may, it went, as I said, down below $1, and it's up 50% in the last month. And then about a week ago, there was a news release where they announced they were selling off the ammo business. So from down, 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 from as high as $10 a share down to less than $1, and then all of a sudden, a couple of weeks before a big announcement, it goes up 50%. Seems like insider trading to me. Maybe the SEC should take a look at that. But you didn't hear it from me. So what happened? The terrible money-losing commodity ammunition business is being sold to Olin, which makes a lot of brands like Remington and ammunition, and they're keeping the gun broker business, which is profitable. So they're getting rid of the losing stuff, they're keeping the profitable stuff, and they're getting 75 million for that. So if you look at the entire company, it's 190 million, but then if you back out the cash, you get 150 million. 150 million, and then you're getting a 75 million payout. So let's just keep it nice round numbers and say you're getting the whole business for 75 million. The person who sold Gun Broker to Ammo Inc. Got 50 million in cash and 140 million in stock, and I'm sure he regrets that because the stock has done so poorly. But he got 190 million for Gun Broker, and then they had the ammunition business. They got rid of the ammunition business, and now you're getting the whole company minus the ammunition business, but plus 75 million. You're getting the whole thing for 75 million. So you bought Gun Broker for 190, and you're getting the whole thing for 75. Seems like a pretty good deal. Management is still terrible, and I don't trust them. So why are we talking about this company? Well, I noticed something interesting with the preferred shares. So preferred shares are sort of halfway between debt and the common shares. They don't go up as much as the common, but if the company ever goes under, you get a liquidation preference. So the bondholders get paid first, and then if there's anything left, the preferred shareholders get paid up to the liquidation preference, which would be $25 in this case. And then after that, if there's anything left, the common shareholders get paid. If there's not anything left, you get $25 or whatever up to 25 before the stockholders get a penny. So what are we looking at? So this is ticker symbol POWWP, and this is the preferred shares. So what's interesting about it is they are have a liquidation preference at $25, and they're callable at 25. So what does that mean? It means that when they issued this, they said, okay, at some time in the future, and that is in 2026, where is it? Right here. Yeah, May 2026. They'll be able to, at their option, say, we're going to buy these back and you have to sell it to us. You don't have a choice in that. So right here, 5/18/2026. So it's January 2025. So uh, a year and 4 months, and they'll be able to call it back and say, you give us this, and we'll pay you $25 for the share, plus any dividends that we owe you, and you're good. So at $25 a share, this would have yielded 8.75%, but because it's trading at $21 a share, and you get the same interest payment, you're getting 10.33. So and if it were to go from 21 to 25, where they say we're going to buy this back from you at 25, you would get an extra $3.35, so that would be 13.40. So 13.40 plus, let me turn this drawing thing off. So 13.40 plus 10.33, that would be 23.73 for a little over a year. 23.73 in a little over a year if it gets called. So why would they call it? Why would they say give us back our shares? Well, if it was at $25 a share where they issued it, they're paying 8.75% interest, and as I said, because of where you're buying it, you're getting 10.33. But if they had no other way to raise money, they'd stick with it at 8.75. But if they don't need the money and they're paying 8.75%, there's a good chance they'll call it back and say, we'll give you $25 a share, which is the face price, and then we don't have to pay this 8.75% anymore. We can get money cheaper somewhere else, right? So why would they do that? As I said, they're getting, they currently have no debt, and besides having no debt, they are getting, if this deal goes through, a $75 million payment. And Gunbroker doesn't take a lot to run because there's no inventory. It's just a website. And if they're getting $75 million in cash, they probably won't be able to invest it someplace like a bank or anything and get anything close to 8.75%. So if they put it in a bank and they're getting 3% and they're lending it at 3 and they're borrowing at 8.75, doesn't make any sense. So with that 75 million, they can just buy back all the preferred shares, and you would get, instead of where it is now $20.60, you would get $25 a share, and you would get the dividend while you wait. And because the dividend is fixed and the price is less than 25, that would work out to 10.3 interest rate. So that's 20 something percent in a year. That's pretty good, because it's not like the common stock where it could go up or it could go down. There's a pretty good likelihood that they will call this, and if you do, you're getting a good return. And if they decide not to call it, you're still getting 10.5% while you wait, which is a pretty nice return for your money. And an interesting thing about this also, this is cumulative preferred. So what does that mean? With the common stock, they can raise or lower the dividend, and sometimes by quite a bit. So for instance, this company, NextEra Energy Partners, went down a lot today. Why is that? Because they had a very nice dividend and the price just kept going down and down and down. So if you had bought it yesterday, you might think you're getting a 22.5% dividend, but this morning they made an announcement that they're canceling the dividend altogether, and it's going from 22.5% dividend to 0% dividend. But with this cumulative preferred stock, this is sort of guaranteed. That's why it's cumulative. and it's preferred, which means you get it before the common. And what you get with the cumulative, besides the $25 liquidation preference, it is cumulative. So if the company ever did get in trouble and they decided we can't afford to pay a dividend, that dividend doesn't go away. They owe it to you, and when they reinstate the dividend, let's say a year or two later, they still owe you that 10% from when they weren't paying it. And as I said, you get the $25 liquidation preference. It is callable, which some people don't like, because if you think, hey, I'm getting this nice 10% a year, I don't want to sell, that could be a negative for you, but I think it's a positive, because not only you're getting this dividend, you're buying it at $20, and if they call it at 25, that's another 20%. So you're getting a nice return on your money there. And the only potential negative, besides it being callable, it doesn't look like gun broker will have any trouble paying this, because if they get to keep the profitable business and they have no debt and they're getting another 75 million, I don't see under what circumstances they won't be able to pay this dividend. What could happen is if the deal falls through, then they are forced to keep this little crappy ammunition business that loses money, and maybe that's the reason the price is like this. The other option is if it gets taken private, and then you're sort of stuck with the preferred shares of a non-public company, and that they can find ways to mess with you there. And given how management is, it's not a slam dunk. So if that's something that bothers you, stay away. But otherwise, I picked up some of this today, and for the dividend I'm getting and the discount from the par, which is 25, and a pretty good chance that they will buy me out next year, because if they're paying 8.75% on the money that they put this out at, and they're getting 75 million coming in, and they got a profitable business that doesn't require much money, it seems like it's just common sense that they would get rid of this high cost financing and go with something cheaper. So that's what I was looking at today, and I did buy shares of Ammo Inc., the preferred shares. I'm not crazy about the common. I think if the sale goes through, you're getting a real bargain, because Gunbroker is very profitable. It doesn't take a lot of money to run, and they sort of have this moat because they won't have competitors, because as I said, eBay, Facebook Marketplace, Amazon, they don't allow gun sales. And although Temu and Alibaba might be coming to the U.S., they don't do ammunition sales either. Sorry, not ammunition. They don't do firearm sales either. And so you're unlikely to have any major competitor that can compete with you. And as far as if you know gun people, I didn't grow up around guns, but people I know that are police officers or hunt, and they tend to use Gunbroker a lot. They speak very highly of it, and it is a regulated industry, so you would need these federal firearms licenses in all 50 states, and you'd have to have a system to collect sales tax and all that. So they have that going for them, so it would be difficult for a new competitor to sort of come in from nowhere and get up to speed on that. As I said, I did buy some of the Ammo Inc. preferred shares. They're POWWP, and if it stays this price, I may buy some more. There's no explanation for why it's down. I do think that discount between 20 and 25 is going to close, and there's been a couple of times where I bought it like below 20, so $18 or $19, and I've sold at 21 or 22. Not for the dividend payment, but just to trade it, because I do think these tend to go up and down with the news of the company, but the news so far on this company is things are looking up. And if you want to take a look at the common, that might be something interesting as well, because as I said, the legacy ammunition business is a terrible business to be in. It's very competitive, and these guys are not very good at it. They kept losing money year after year, and the management is terrible. I wouldn't trust them. But if they got rid of the ammunition, now you've got a great business, which is gun broker, and terrible management. And hopefully, it's such a good business that it can withstand some mismanagement, or maybe an activist shareholder can come in and get rid of these people. But as I said, if you look at what the company's trading at, 190 million, and then you back out the cash, you get 153, and then 75 million in cash coming in from the ammo sales. So you're getting all of Gunbroker, which they bought for 190 million, and you're getting it for 75 million. And on a trailing PE basis, that was 17. But if you sort of half that, right, it's probably like a PE of 8. So uh, nice work if you can get it, but the common would be more risky, and I bought some of the preferred because I'd rather play this just getting my fixed payment and not have to rely on management doing the right thing, or being competent enough to close a simple asset sale, which as a second year attorney in a law firm I could do blindfolded. But these guys are about as organized as a shit fight at the zoo. So yeah, I don't trust them. But you do you. This is just me talking about my process. You don't have to like, you don't have to subscribe, but if you have any thoughts on this company, just let me know. And especially if you have a contrary view, because I don't want this to be an echo chamber. I'd like to hear contrary opinions, and if I'm wrong, I can get out of it quickly. Anyway, have a great day, everyone.